Good afternoon, everybody. This is Hunter Mozingo, Associate Portfolio Manager and Research Analyst for Revere Asset Management, bringing you your daily market insight video here on July 25th, a Monday, 4:13 p.m. Eastern Time in Jacksonville, Florida, as I bring this video to you. And today we saw the growth and tech-oriented stuff lag, while we saw the commodity-related stocks surge and rebound a bit after some really harsh pullbacks in oils, fertilizer stocks, etc., that type of area. We're going to look at those charts here today. We're also going to look at the 10-year note, which has a head and shoulders pattern to it. It may be continuing to break down, but it might not. So we're going to talk about that in a little bit more detail, as well as the dollar, some of the best stocks of the day, some of the worst stocks of the day, all that good stuff. So let's get right into it. What just happened? NASDAQ and BigTech weak on a relatively tight and choppy day for the S&P 500. Commodity stocks rebound. Performance-wise, G6 up 0.23, S&P up 0.13, Qs the laggard of the day. As I said, big tech really weighing on the NASDAQ today. Down 0.57, Dow up a little less than 1/3%, mid and small caps up a little more than 0.6, 60/40 up 0.17, and grow up 0.14. No changes to market state, still in correction / short-term uptrend. As the big picture here on a daily chart, for that matter, has not really changed, even though we have paused / pulled back over the course of the last 2 days. No changes to the trend gauge either, as you can see here. Same as Don's video on Friday again. No reason to really change anything given the action today. So really quick, before I get to the tail of the tape, let me briefly highlight Revere for a quick moment. And I had a couple of people reach out to me over the weekend. Thank you to anybody who, not just this weekend, but just in general over the course of me doing these videos, has asked questions, sent in a compliment, anything like that. But if you do have a question, if you want to know more about a certain stock, if you want to know more about Revere and the growtection strategy, don't hesitate to send me an email here, hunter@revereasset.com. You can also call 855-732-5932. You can email anybody here as well, Hunter, Merrill, Don, or Dan at revereasset.com. So let's get to the tail of the tape. I've got the S&P 500 on the right-hand side of the screen per usual. And as you can see, nothing really changed in the grand scheme of things here. We had a big move up off the bottom, pausing a little bit at a logical level here, trying to find some support and kind of some breathing room as these moving averages start to catch up. So sentiment-wise, put call closed right at 1. Again, I've been saying it for months now, it feels like, but we just continue to live in this 0.9 to 1 range now on the CPC. VIX closed at 23.3, relatively unchanged, up about 1%, and the fear greed down just a little tiny bit at 38 here, still in the fear range. So the bull case is still intact for the time being. We're still above those moving averages, still above the 21 EMA. The 8 has now crossed through the 50 on the S&P 500. And that 50-day is possibly starting to curl up a little bit here too for the first time in a while. We haven't seen that happen since back here at the end of March. Notes-wise, 5 of the top 7 QQQ names report earnings this week. We're going to talk about that later in the video. IW and QQQ broke Friday's low. The other indices, for the most part, holding up. News, Wednesday, the Fed is raising interest rates. The key thing the market wants to know is by how much, and then subsequent to that, what is Fed Chair Powell going to say? We've also got GDP number on Thursday as well. What we're watching today, S&P versus support at 39.19. We did not make it there today. This 39.50 area, if you kind of follow my cursor here, that's kind of holding up as support for the time being. We danced all around it today, ended up having a strong close. Qs versus support at 300 ended up getting below it, but coming back above it. So really this should be an undercut and reclaim. As like I said, we had a pretty strong close. So we'll change this as I'm on this right now to U and R of that 300 level. So it was right around 297, 298 up until about, I'd say 5 minutes into the close. And it closed about, I don't know, 20, 30 cents above that 300 level, big level, along with the kind of 297 area. But we're going to get to some of those key spots on the indices in a second. Action-wise, the S&P opened up 0.15%, proceeded to chop higher, then kind of sold off in the middle of the day down to 39.43, and then rallied into the close. So just typical choppy action when you've got earnings ahead and a big Fed decision as well. S&P, as far as the range goes, like I said, 39.43, 39.75, Look at the size of this candle relative to the size of all these other candles in here. Haven't really seen a day quite this tight, other than maybe right here and right here. So relatively uncommon to see a less than 1% range on the S&P, at least in the last several months. So that's kind of the point I want to make there. I ran through the performance here already, so we won't go over that again. Sector-wise, oil is really having a strong day today. Metals and mining, banks, and utilities really kind of the standout sectors today. Bonds, communications, technology, discretionary, semiconductor, software, home builders, retail, and gold miners all having a really bad day today. So I say really bad, not terrible, but a lot of these were much weaker 10 minutes prior to the close than they actually finished today. But in general, this was the area that struggled today, the more risk-on growth / tech area. No changes to the portfolio today, no trades. Bottom line, choppy tight action ahead of earnings and the Fed decision. So we're going to talk about some of those key earnings and some of the major stocks as far as market cap goes in the S&P and in the NASDAQ. And briefly, right here, we'll highlight the moving averages here. 39.20, that's where the 50-day is. It's starting to possibly get flat and start to hook up. 21 EMA just slightly below 3,900 there, as you can see. Today's close 39.67, choppy tight range, rally into the close. So moving along to the charts here, as I mentioned, this 3,900, and this I'm talking about last week when I say as I mentioned, this was a huge level for the S&P to get through, this 3,900 area here. And you can see that we did that last week, had a pretty strong move above it as well as above the 50-day. What you're looking for here, if we have a significant pullback, you want to see this 3,900-ish area hold at the very least. And that would correspond kind of to the cluster of the 50 and the 21, which are pinching up together here. This 39.50 area is holding for now, but if that is broken, and if Friday's low is broken, that's what I'm looking for, is that 3,900 to 3,920-ish area to hold. That's really what you want to see. You want to see this resistance flip to support. That's what you're looking for if there's going to be continued positive action to the upside. And it's basically the same concept here for the rest of the indices. For the Qs, remember that major horizontal resistance line I talked about, I believe, in last Monday's video? That was roughly the 296, 297 area. We got down to about 298 today. The 21 EMA is now above the 50 and it's at 294. That's kind of the area I would like to see the Qs hold. So this big area of resistance, I'd like to see that flip to support. So that's the first step for the indices in the sense of keeping this positive action going, possibly keeping this rally going. You got to flip this into support here on QQQ and SPX, as well as the rest of the indices too. So DIA, same thing here, but we're going to call it the 315 to 318 area. You can see today it was relatively strong compared to the other indices, or at least compared to the Qs, up a little bit here, but same situation basically. The 21 and the 50 are pinching together on all these major indices. You want to see the resistance from the prior month or so. On the Dow, it's about 315 here on DIA ETF, 315 to 318. You want to see that act as support. And moving along here, IWM, that big level was roughly 175 to 178. You can see today we got down to 178 and bounced off of it nicely. IWM, one of the top performers today. Same situation here. You want to see this flip to support. If it does come back down and test it, again, that is right where the 21 and the 50 are going to be curling on all of these indices. And conversely, to the upside, you're looking to take out the recent highs, right? If we do continue further, you're looking for a move over Friday's high. And that's kind of the baseline for what we're looking for here at Revere. You want to see these areas flip to support. And then conversely, if they do, you want to see these highs taken out. But again, big time earnings this week, as well as a big time Fed decision. So let's get into the dollar just for a brief moment here, because I skipped over it, which was down again slightly today. You can see this continuing to kind of trickle downwards here after this nasty candle up here, hanging out around this 21. It's not one that traditionally respects moving averages all that much, so just keep that in mind. But the important thing here is it has come off a little bit. Now, if this gets some major traction to the upside, that could spell trouble for equities in a major way. So keep an eye on the dollar. Keep an eye on these recent kind of resistance here. If it can get back above the 8, if it can get back above the 21 and have that start moving upward, that could not be a good thing for stocks. And then also TNX moving up today. I mentioned the head and shoulders pattern. Here's the shoulder, the head, the next shoulder. And you can see it looks like it was breaking down, but it's actually moving up higher today. So I'd keep an eye on this. If this breaks this 27 area here, again, that could lead to further downside. Just a previous area where this bounced, 27 here, 27-ish here. Keep an eye on how this acts, though. It could ultimately be a failed breakdown and continue higher. But for right now, it does have a head and shoulders type look to it on the 10-year yield. Moving along to actual stocks and sectors here. XOP, I mentioned oil's having a good day, up about 5.5%. XLE, dominated by Chevron and Exxon, up about 4%. One of the top names out there in the oil space, Oxy, up about 5.5% and over its recent highs. That is a strong move. Again, earnings are approaching for pretty much every name in the market, so keep that in mind. More commodity names that had a big rebound today. CF up into the 50-day, up 6.5% today. The fertilizer names. MOS up 6%, back above the 200-day today. AMR, which these are really volatile. These are the coal names, but same situation. Down on Friday, up 9% today. Arch, another coal name, not up quite as much, but up again, up about 4% on a day where the markets were flat to down. Moving along here, XME, also one of the strongest sectors today, up 3%, back above the 21 EMA. NUE, we talked about this on last Thursday's video, had a bad candle on Friday, but up 2% today. Steel stocks trying to make a little bit of a comeback, as well as a lot of the commodity related metals and things of that nature. Also, we had banks having a good day today as well. As you can see, these have kind of moved higher and gotten through that 50-day since this candle here where they put in a hammer. So banks moving higher, metals and mining moving higher. Also, the food related commodities moving higher. So not just necessarily metals or fertilizers, soybeans moving higher, wheat moving higher. And I know these charts have had really nasty sell-offs, but the point here is they were having a good day today while technology was not. And corn was the other food name here, also up about 2%, almost 3% today. So the commodity related names having a good day. We also had solar having a good day, which continues to have a pretty strong correlation to oil in the sense that when oil and oil stocks are moving higher, solar stocks have tended to do better. So Enphase, the main name here, up about 3.5%, as you can see. Earnings approaching here, but again, up 3.5% on a day where the NASDAQ was down. That's something you want to pay attention to here. Celsius, a name we do own, also one of kind of bucking the trend for a lot of growth stocks that were down today, up about 4%. And a number of healthcare related names also having a decent day today. McKesson up 1.7%. Eli Lilly also green today, up about 1%. And lastly, CNC, Centene Corporation, also up about 1%. So the healthcare names continue to show some relative strength. I mean, the RS line here has continued to angle up for CNC. And so that's kind of where the strength was today, not so much in the more risk on areas. And so now we're going to go to the big tech. We're going to talk about the ones that have earnings this week. And we're going to talk about how they were down today and weak today. So Apple earnings on Thursday, approaching this 150-ish level. Again, it's a major level for Apple to hold on to after it ran up here and got rejected. Or at least pulled back for the time being. So Apple down about 1% or a little less today, earnings on Thursday. Nvidia, one of the major 7 that doesn't have earnings for a while, about a month out. Nvidia down about 2%. It did kind of undercut and reclaim the 50-day, but poor action in general, pretty much out of the gate here for Nvidia. Amazon also reports this week, down about 1%, back to this 120-ish area. Again, nothing necessarily wrong with it, but keep in mind earnings is this week. The Fed decision will also probably play a role in how these stocks react, as they are just dominant in regards to the weight they make up in the actual QQQ and SPY themselves. But Amazon here, I don't know why they're down after hours, so I don't know what that's about, but down about 1% today. And moving along for the rest of the big tech here, Google, a bear flag breakdown. As you can see here, if you follow my cursor, kind of the trend line here that held up, ultimately broke on Friday and today unable to reclaim That trend line kind of ran into it as resistance today, which is not the greatest sign, but again, earnings approaching pretty quickly. Google reports tomorrow. Microsoft also reports tomorrow. Back below those moving averages, as you can see, it did make a lower high on this side, which is not ideal. But again, earnings very soon, and the Fed likely to be major catalysts for these big cap names. Tesla also weak today, down back to this 800-ish area. But again, this is following a really big move on earnings. So some pullback / digestion somewhat to be expected here from Tesla. And then lastly, Facebook or Meta back below all of its moving averages, earnings in 2 days here. So you got Facebook, Google, Amazon, Apple, and Microsoft all reporting this week, and all likely to have some serious impact on the indices as well. Moving along here, just to a few sectors. ITB having a bad day today after a pretty strong run, down a little less than 2%, but again, rates move up. That's not necessarily ideal for ITB, and that's been the strong correlation over the course of this year. XLY down about 1%. That's consumer discretionary. XLK down a little less than 1% here. That's your Apple and Microsoft dominated ETF. And then lastly, SOX, the semiconductor ETF, also down a little bit today, but putting in a nice hammer, as you can see here. Moving along here, Ollie having a tough day today. This one looked like it was possibly going to be bouncing off the 21. It ended up finishing well off the lows, but not the greatest looking pattern over the last couple of days in terms of the volume and just the way it's traded. Down a decent bit today, and was down about 5 or 6% at the lows. Some growth names not having the best days. There's more than just these few, but GTLB, a name I've talked about a good bit, down about 4%. Bros down to close to 1.5 or 2%. Very light volume, however. But these names starting to come back down below moving averages. A lot of growth names had really bad days on Friday, and not many that showed strength today, with like Celsius was one exception. Roblox was an exception today. But a lot of growth names, again, today down a little bit to 1 to 2 to 3 or 4% or so. And lastly here, I mentioned Bitcoin and Ethereum. We actually had Ethereum has been stronger than Bitcoin in the recent history, as in like the last 2 or 3 weeks. It had a big move up off of kind of like 1,000, 1,100 up to like 15, 16, 1,700 range, and it's pulled back a little bit here. But BITO, this is the Bitcoin ETF. This actually had a breakout out of this range here, and BITO is not a perfect representation of Bitcoin, so always keep that in mind. It's pretty close. But what happened is we had a breakout out of this consolidation near lows that ultimately has failed, and it's tucked back into this range. So it looked like kind of a bear flag type of breakdown or breakout, excuse me, but that ultimately has not had any legs, and it's just pulled right back into the range there. And so if you're looking at actual Bitcoin itself, that breakout corresponded with getting over kind of the 23,500 area, which we did for just a brief amount of time. Now we're back into the range, back below kind of the 22,000 area. So Bitcoin trying to gain some steam over the course of the last week or so, but ultimately it's just kind of right back where we were, unable to really sustain that move. And then lastly, GLD, even though the dollar was down slightly today, gold not having a good day. One of the biggest miner names in the gold space getting absolutely demolished today, Newmont, down about 14% here, as you can see, on pretty major volume as well. This one's been cut in half over the course of the last 3 months, and that is just a brutal action for what is supposed to be one of the institutional favorites here, one of the biggest market cap names in the mining space. You can see it's a $35 billion company. Back here in April, it was a $70 billion company. So just really poor action here, and that affected pretty much all the gold miners out there. But gold down just a little bit today, still just stuck on this 160 level, not really doing anything but hovering all around it over the course of the last 2 weeks or so. So that is going to wrap up today's video. If you have any questions or comments, please don't hesitate to email me, hunter@revereasset.com. But other than that, I will see you guys on Thursday's video, as well as the podcast this week. So I hope you all have a great week. Thanks, everybody.